Do you know what separates the rich from the average person? It's not just money, it's financial knowledge. The wealthy understand certain financial terms that help them spot opportunities, avoid traps, and grow wealth faster. Today, I am breaking down 7 finance terms you absolutely need to know if you want to get rich. And don't worry, I'll explain them in plain, simple language, no boring textbook stuff. Stick with me, because once you understand these terms, money will start making a lot more sense. Welcome back to officialFinanceClarity, finance made simple, wealth made possible. If you're new here, make sure to hit that subscribe button and turn on the bell, because every week we break down money, investing, and wealth building into simple lessons anyone can understand. Section 1. Net worth. The first term is net worth. This is one of the most important numbers in your financial life. Net worth equals what you own assets, what you owe liabilities. If you own a car worth $20,000 but still owe $10,000 on it, your net worth from that car is only $10,000. Why does this matter? Because rich people focus less on income and more on net worth. You could be making $200,000 a year, but if you spend everything and have no assets, your net worth might be close to zero. The key to wealth is growing your net worth over time. Section 2. Assets and liabilities. Next, let's talk about assets versus liabilities. An asset puts money in your pocket like stocks, rental properties, or a business. A liability takes money out of your pocket like car loans, credit card debt, or that expensive boat that keeps draining you. Here's the secret. The rich focus on buying assets, while the poor often pile up liabilities. Understanding the difference will literally change how you spend your money. Section 3. Compound interest. Now, the third term, compound interest. This is often called the eighth wonder of the world because it can make you rich if you use it, or keep you broke if you ignore it. Compound interest means you earn interest not just on your money, but also on the interest you've already earned. Over time, that snowball effect becomes massive. Example, if you invest $500 a month at an average return of 8%, in 30 years you'll have over $745,000. That's the magic of compounding. The earlier you start, the richer you get because time is the biggest multiplier. Section 4. Cash flow. Fourth. Let's talk about cash flow. Cash flow is simply the money coming in versus the money going out. Rich people focus on building positive cash flow income that exceeds expenses. That's why they invest in rental properties, dividend stocks, and businesses. Why is this so important? Because cash flow is what pays your bills and gives you financial freedom. Even if you're worth millions on paper, without cash flow, you can go broke. Section 5. Leverage. The fifth term is leverage. Leverage means using other people's money, time, or resources to grow wealth. For example, real estate investors use bank loans to buy properties they couldn't afford outright. Entrepreneurs hire teams so they're not limited to their own time. But here's the warning. Leverage can multiply gains, but it can also multiply losses. Rich people understand how to use leverage strategically, while most people fear it or misuse it. Section 6. Diversification. Number 6 is diversification. This means spreading your investments across different assets to reduce risk. Think of it like this. Don't put all your eggs in one basket. If you invest all your money in one stock and it crashes, you're in trouble. But if you spread it across stocks, bonds, real estate, and businesses, one failure won't wipe you out. The rich understand that diversification protects wealthy, especially during uncertain times, like recessions or market crashes. Section 7. Inflation. And finally, number 7, inflation. Inflation is the increase in prices over time, and it's the hidden thief of wealth. If inflation is 3% a year, your money loses buying power every year you keep it sitting in a savings account. That's why the rich don't just save money, they invest it. Assets like real estate, stocks, and businesses tend to grow faster than inflation, protecting and growing wealth. So let's recap the 7 finance terms you need to know to get rich. Net worth. Assets versus liabilities. Compound interest. Cash flow. Leverage. Diversification. Inflation. These aren't just fancy words. They're the building blocks of wealth. The sooner you understand them, the sooner you'll make money decisions like the rich do. Thanks for watching officialFinanceClarity. Finance made simple, wealth made possible. If you found this video helpful, hit that like button, subscribe, and share it with a friend who needs to get their money game up. And tell me in the comments, which of these 7 terms do you feel most confident about, and which one do you want me to make a deeper video on? Remember, knowledge is the first step to wealth. See you in the next video.